Hey, it's Elgin here. I wanted to reach out and talk to you guys for a couple of things here, you buyers and sellers. I'm starting with you sellers, but have you guys noticed what's going on in the stock market? So I've been around the block a couple of times. Wanted to kind of give you a possible heads up here. Uh, if you've noticed, the stock market, ever since the interest rates have been risen, has gone crazy in a downward direction. So do I think that the stock market is about to go to zero or anything like that? Of course not. But let me tell you a couple of things that are happening. Because the Fed's just raised interest rates, odds are they're going to have to continue to raise them. They can't stop. They can't reverse that. It would look too bad. So what am I saying to you? What I'm saying is that you're going to start to see consumer confidence become a little bit more cautious. So what does that mean as far as real estate goes? Well, we got a couple of things. Number one is, as a potential seller, if you have been on the fence and you're saying things like, I want to sell, but I'm just going to wait until the prices go higher. Or maybe you really need to sell, but you know what? The prices have just gone up high enough to where you possibly have some equity in it or have a little bit, but you want more money out of it. Here's something for you to consider. Is as the interest rates continue to rise, and they will, the buyers are not going to be able to qualify and or afford certain price points. In addition to that, what if, and I don't know whether it will or not, but what if prices do not rise? Or, let's face it, depending upon where you're at in the bottom of our real estate market falling, you've probably increased 35, 40, 45%, depending upon your location, of what your house is worth today than it was then. What happens, and is it unrealistic to think property value could drop 5 or 10%? I mean, that's still a great return from where we've been, but if it dropped 5 or 10% right now and were to stay flat for a little bit, still a great market, great pricing, but are you in position to maintain and sustain yourself? That's a question you should ask if you're a seller. Also, because the inventory is so low right now, as a seller, if you put a good product on the market and price it well, you will get a buyer. So I know there are buyers out there right now that are saying, well, hey, maybe we should wait. Well, remember what I just said. Interest rates are going to rise. We really haven't seen the effect of where interest rates are going to go. And I don't know how much they're going to rise or anything like that, but I do know this. I do know that the interest rate rising will have more of an effect on you as a buyer, not only in qualifying, but what your monthly payments and outlay will be per month than the prices being higher or lower. So if you're buying a piece of property to live in it, realistically, this might be the best opportune time for you. Just some thoughts. If you have any questions or like to follow us more on our blogs or LinkedIn or Facebook or whatever, feel free to. The Elgin Pilar Walker team, our goal is to help all of the families we possibly can have proper information and education to make a great decision for themselves. God bless. Happy 2016. Have a fantastic, fantastic weekend.